Welcome to Tilly Money video. There's so much to learn about money and so much I want to help you to understand. I even maintain that the Beatles were confused about money. One song they sang was, "Give me money, that's what I want." And then Paul McCartney would say, "But money can't buy you love." And so first up, in talking to you about the importance of money, I'd like to explain to you that money in itself is important because it gives you choices. It gives you an ability to decide what you want to do with your life. It won't buy you love. It won't buy you true friendship. It won't do all those important things that give your life value, but it will help you understand how important it is to have choices and how important it is to be financially independent. And that's what we're going to do in these classroom type situations where we teach you step by step about things that have real knowledge behind them but need to be understood in a more simple way. So there's not going to be any confusing language, there's not going to be any terms that I don't even come back to and understand. And the reason I'll come back to them is because you're going to write questions or email questions and I'll address those as my homework. So let's get ready today to talk about the basics of money. And to drill that down, let's start off with an important topic called asset classes. Now, what on earth are asset classes? The first question I'm going to ask then is, well, what's an asset? An asset is something that you own, something that has value. And there are so many different types of assets. I normally wear a pendant that has a beautiful piece of Polish amber attached to it. The chain broke, and so I immediately got it fixed. And I feel lost today without it, but let's hope I find my direction. Now that has value, two types of value. It is an expensive piece of jewellery, but it has value to me because someone who I'm very close to gave it to me. And therefore, even if it was $1 in value, it would still be very important. It's an asset. I wear my mother's engagement and wedding ring. It's got amazing significance to me because it's memories of my mother. So there's no amount of money that would be given to me for me to part with that. But if I cashed it in, it may have $10,000, $20,000, $30,000 worth of value. I don't want to even go there because it's got such importance. But to get into the real importance of assets, you can divide that assets into 4 different classes. And the most important ones are equities or shares, fixed interest, and we'll go into a bit of that later, property, or what's classified as other. And that follows a whole list of things. It can be art, it can be fast cars, it can be a whole range of things that are classified as other assets. So let's take these one by one. Equities. Now, I'm sure that you understand that there's a market operating out there called the share market. It's the buying and selling of shares in companies, companies that range from big companies that we all know, like the Commonwealth Bank, Westpac, Telstra, whatever. There are overseas companies as well, but Australian companies and some overseas companies are listed on the Australian Stock Exchange, and that's where the buying and selling of shares goes on. Holding shares can be risky. They're not the most secure form of assets, but no asset is completely risk-free. But if you do like to take a little bit of measured risk with knowledge, and knowledge that you'll learn as we progress these lessons with Tilly Money, you will come to understand that there is money to be made by understanding the share market. But you'll only make that money if you are actually informed about what to buy, what to sell, and when to do those 2 activities. So we'll be going into a lot more detail about the share market, but we're on to asset classes now. So the next kind of asset that we'll talk about, in brief, is a thing called fixed interest. Now these are relatively risk-free. And as I said relatively because nothing comes with absolute zero risk. It's almost impossible. But when you go into fixed interest, you can do one of 2 things. You can buy government bonds, and currently because of COVID-19, the government is needing to raise money because it's doing a lot of spending out there, and so it sells bonds. They're pretty safe, The government would have to go downhill itself, not just a Labor or Liberal government, but the complete Australian government would have to go downhill for bonds to be shaky. It can happen. It happens in countries like South America. But you buy government bonds, you give the government money, they give you a bond at a fixed rate of interest to pay back in the future. Or, something more familiar, you might invest in what's called term deposits. Again, fairly secure because the government guarantees with lending institutions the first $250,000 worth of your deposit, but they could still come with risk. You might get a fixed rate of interest for putting your money away for a year in what's called a fixed term deposit. You might put it away for 2 years or 3 years. The longer you put it away, the higher the interest rate. But there's one thing to remember. Interest rates for some time have been very low, and the outlook is that they'll remain lower. So if you actually like to sleep at night, if you like to take minimal amount of risk, but you're prepared to take a very low return, then perhaps having money in fixed interest deposits is a more peaceful kind of way to invest. But most people have to up the ante a bit, and that's why people also invest in shares. And they invest in something that's so close to most Australian hearts, it's property. Why do people love property? Because property is classified as bricks and mortar. A company may go downhill, but does a house, does a unit? Not easily. Share prices can drop, so property prices can drop, but they tend to rebound again. So property, we love them. You can invest in residential property by being a landlord and buying another unit, but you also can invest in your own home. Often Australians don't see that as an investment. They love to buy a home, but they don't see that as a real way to invest, and it is. It's often most people's first investment and often the most expensive investment that they'll ever buy. And it should really be seen, even though it's got benefits of no capital gains tax if it's your main place where you live, it really should be seen as an investment. You should try and pay it off as quickly as possible. You can also invest in commercial property. They can have very good returns. COVID-19 has affected some commercial property plays, but generally investing in an office building or some other kind of commercial property development, again, it can be risky, but it does come with good returns. And then finally, to that more colourful type of asset that we call collectibles or other assets. And they include things like artwork, jewellery. I've mentioned jewellery that I have myself, but the jewellery that tends to hold real value is exotic, exquisite, unique pieces of jewellery, and they trade at a lot of money. Most people's diamond engagement rings, while they've got significant value to them, it's not necessarily something that you would invest in. You keep it for your life, might maybe pass it on to your family, but it's the real brand names and the beautiful diamond pieces and the beautiful gold and rubies that people invest in this term called collectibles. Something near and dear to my heart is art. I love it. And I invest in Australian artists, Nicholas Harding, an art piece in my collection, and I value that enormously because art brings me great pleasure, as well as one day, I hope, big returns as well. Often in the collectibles sector is something called cars. Now, it's pretty well known that if you buy a new car, even though you love it and it's a bit of a status symbol, the day you drive that out of your driveway or the dealership, it goes down in value. But there are cars that store value enormously. You know, mostly they're the domain of what I call rev heads, but there are people who have acquired huge fortunes in that asset class called cars. So in brief, there are your 4 asset classes. There are other classes as well, gold, commodities and whatever, but let's keep to those main 4 because they're the ones that most people invest in. And just to do a recap, that's equities, fixed interest, property and collectibles. Now there is one thing before I sign off. You may love property, I do. Would I invest all my money in property? No way, it's risky. Would I invest all my money in shares? I love shares as well, and I'm recently new to the share market and I get engaged and I trade. Would I invest all my money in shares? No way, too risky. Would I put all my money into fixed interest deposits? Equally no way, the return's not big enough. I'm prepared to take some risk. I told you I put a bit of money into art and I've got a little bit of money in jewellery, but not a lot. The main thing that you need to understand about assets is that you don't put all your eggs in one asset basket. You do something that's really, really important, and it's a term called diversification. That means you spread your risk. You have some of your money in property, some of your money in collectibles, some of your money in fixed interest, and some of your money in shares. Because if the share market drops, you've lost a lot of your money. It will normally regain, but it's a pretty big shock to take when that amount of drop can occur. But perhaps at the same time, the property market's going through a bit of a bounce. So you're offsetting one loss against another. So one thing to really remember, learn about asset classes, but more important than that, learn about the importance of diversification. It's the name of the game. There you go, thanks for listening. That's our first video on fertility money. Take one, we made it, and there'll be a lot more of these as we explain the wonderful and sometimes mysterious world of money.